Hello and welcome. You're watching ET Markets. I'm Tanya Aneja, and today I'm going to be joined by a very special guest. Hemang Jani, equity strategist at Motilal Oswal, is joining in to share his thoughts on the current market scenario, sectors looking attractive at this point in time, and much more. Thank you so much, Mr. Jani, for joining us on ET Markets.
Thank you so much, Tanya, for having me.
The US Fed has increased the interest rates by 75 basis points, very much in line with what the street was expecting. So how do you see it for the Indian markets? And also, do you see recession fears are real for global economies?
This 75 basis points, people started expecting only in the last 2 or 3 days, particularly after the latest inflation data came in. And yes, the rate hike of 75 basis points is in line. But what's more important, Tanya, to understand is that given the high inflation and the backdrop that we have, even in July, we are going to see a significant rate hike. That's what he has indicated. So clearly, this as an event is over. But given that we are in for a substantial, rate hiking cycle, the overall implications for emerging markets, FII flows for Indian markets are not good, and we think that this would have some negative repercussions for our markets.
Absolutely. And I would also like to understand it from you, sir, that why are the markets so volatile? I mean, we are in the 6th month already, and the first 5 months have been nothing short of a roller coaster ride for investors. So, I mean, bulls are trying to make a comeback, but bears clearly have an edge. So, is the worst behind us, or is there more pain ahead?
So, yes, in terms of price correction, at the index level, we would be down about 15 to 17% from the top. And stocks level, of course, it will vary. The mid cap and small caps have fallen more compared to large cap. So my feel is that still people are having very high expectations about the earnings growth for this year. And this quarter will give you far more clearer picture in terms of how much damage this entire high crude, high interest rate kind of an environment would have. So once we get a little bit of color in terms of the quarter one earnings, that is when we will be in a position to see how deeper the impact the market could have in terms of earnings impact.
Absolutely. And now coming to the sectors, which sectors are looking attractive after the recent correction? And I mean the sectors that you are betting on at this point in time that could relatively be safe bets in a rising interest rate scenario?
So in terms of sectors, we just came out with our strategy note, and what we are saying is that sectors like banks, auto, real estate, and to some extent the telecom or consumer names. These are the sectors where we think that the next year outlook is still quite good in terms of growth, and we should be focusing upon some of the names within these sectors that we have outlined.
Okay, and any specific stock recommendations that you would like to give?
Yeah, so within the banking, we like ICICI Bank,
okay,
HDFC Bank and State Bank of India. These are our top picks.
Okay.
And other than that, auto, we like Maruti, Ashok Leyland. These are our top stocks over there. Real estate, we prefer both Lodha and Oberoi. And apart from that, the entire QSR space, hotel space, we have a very positive view. So, Indian hotel is something that we like. Within the small cap name, there's a company called Lemon Tree, which we prefer. So these are some of the stocks that we can keep on our radar and try to buy through this entire correction that we are witnessing.
Absolutely. And what is your take on the newly listed companies? I mean, if we talk about LIC only, it's down over 25% from its issue price. So what would be your advice for the investors?
So Tanya, when a stock gets listed at a significant discount to the issue price, it takes a while for it to really claw back to that level, and that process takes typically longer time. We like LIC for the kind of business and the market share that they have, but we would be more comfortable entering into it once it crosses that issue price because that's when the pain would be over in terms of weak hands getting out of it. And we do like insurance. I think in the current environment, insurance as a sector should do well. So LIC, HDFC, Life, and one more general insurance company, maybe Star Health. These are the companies that we could really focus in that particular space.
Absolutely. And not to forget about the new age internet companies. I mean, shares like Paytm, Zomato, Nykaa, they have corrected significantly. So do you think now is the time to step in, or one should avoid these stocks?
So Tanya, currently we are in a climate or environment where the appetite for very high P stock or exotic business model companies is not there. People are looking out for reasonably priced, in terms of valuations, where you see some growth visibility. This entire inflation concern is not there, right? So in that kind of a scenario, we would not be very positive on these names. But yes, for somebody who wants to do a quick trade or short term perspective he has, then these stocks can provide some opportunity after the kind of fall that we have seen in the last few months.
Absolutely. And also coming to the FII's outflow, I mean, foreign investors have been on a selling spree. So what is exactly pushing them away from the markets? And what is your outlook on this relentless FII selling pressure?
So in the last about 10 months, we have seen selling of almost about 3,40,000 crore. This is the highest that we have seen in many, many years.
Absolutely.
And it's essentially driven by the aggressive rate hikes that is being done by the US Fed. And apart from that, people are not very clear about what kind of earning impact the recent high crude oil price and commodity prices would have. So that's been the key driver of the selling that we have seen. And we have to remember that of the total holding that the FIIs have, what they've sold is hardly about 2 or 3%. So it's very difficult to gauge how much more to go if things really aggravate in terms of sentiment.
Absolutely. And lastly, before we let you go, what would be your advice to all the first-time investors? I mean, any strategies that they should follow, any mistakes that they should avoid, especially at this point in time?
So for new investors, I think in a way it's good that the markets are going through correction, and you would really have a good experience of what the equity investment is all about. You have also go through pain. The returns are never linear, and we should basically stay focused in terms of whatever the investment plan that we have. The allocation is very, very critical if you're a new investor or even a mature investor, and because of the volatility and the kind of swings that we are seeing in the news flow around us, we should not really change that basic allocation plan and stick to it through either SIP or direct maybe stock buying. And I would really request them to focus more upon the large cap companies where there is a little bit more stability, rather than going for very high momentum driven mid cap or small cap companies.
Okay, focus on large cap companies. That's the word coming in from Mr. Jani. On that wonderful note, thank you so much, sir, for joining us, for being with us and taking your time out. Thank you so much.
Thank you, Tanya. It was a pleasure.